What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. I wanted to talk to you about how and why we use trigger days, all right? We use trigger days from Stacy Burke: inside days, first red days, first green days, close and breakout, 3 days of breakout traders, long or short in the market. These are our trigger days, right? We use these trigger days to help us quickly narrow down our watch list each day, okay? Plus, when you're going to your charts, it helps to have a trigger day, right? So if you have an inside day on Tuesday, then you might come to your charts on Wednesday looking for a specific type of day, maybe, a false break of the inside day for a trade in the opposite direction or something like that, right? But it at least alerts you to the fact that we might look for a setup on Wednesday. Otherwise, you're just going to your charts every day hoping to get lucky, right? You don't have any way of really narrowing down your watch list to markets that have a potential best trade setup. That's why we use the trigger days, all right? It simplifies things for us. It makes things faster. Like the ease of use is just greater when we use the trigger days. That's why we use them, all right? Now, how we use them. This is kind of important, all right? Because Stacy says it all the time. He says traders are just calling any up closing day a first green day and any down closing day a first red day, and this just isn't the case. And you know it too, right? You've had a first green day signal before that did not pan out the way you thought it would the next day, right? You think it's supposed to go up and then it just falls off the face of the earth and you're like, what the hell, bro? We had a first green day, trigger day, so we should have got this trade. But that is not how the trigger days work, all right? First and foremost, we're using them to just make things a little more simple, a little easier, a little quicker, all right? But we don't rely on trigger days necessarily to just get us into a trade. It's not that type of trigger day. I like to call them signal days, okay? It's a signal day. A trigger day makes it sound like as soon as you see it, you get in the market, right? That's what triggers you in the market. But that is not what triggers us into the market, all right? Just because you have a signal day, you don't do anything like mechanical. It's not a mechanical system. This is a discretionary system. You have to be on your toes. So if you get a signal day, let's say you're hunting first red day signal days, right? And you get that, you're going to need to zoom out to like the daily charts, see where you're at, like in the month, are you up high? If you're looking for a first red day, signal day, you might want to see that up high, right? Or in a market that's broken down, and then maybe you got 3 days of breakout traders long in the market going back into that daily downtrend, right? Then a first red day, maybe that will be a valid signal day, right? So you'll want to zoom out and look at that. And then after that, you're using the regular daily process, okay? You should be able to, after a little while, right? Because we're looking for the same types of setups every time, pump and dump or dump and pump, right? Because of that, over time, you should get used to like the outline of how this chart should look, what a market looks like when it's selling off, right? Or what a market looks like when it's breaking out to the upside with a lot of momentum on the day, right? You should sort of know what that looks like. The patterns are relatively speaking the same. Of course, there are endless variations, which makes it more difficult. But, right, if you see that the New York session has traded back into the London highs and put an M formation in and then fell and like broke the neckline of a Head and Shoulders or something, that's the kind of thing you're looking for, right? Right at the timing windows, right at like the new hour or halfway mark of an hour or something like this, right? Lining it up. Maybe we're looking at whole number levels, whatever it is. But it's the same thing day after day, week after week, rinse and repeat, right? Stacy shows us, he draws it on notebook paper. He shows us the 2 types of trades we're looking for, right? The trap and shift or the peak formation, consolidation for the trade, that kind of thing, over time you will know what that looks like. Okay, so you'll be using your trigger day to just know what day you're coming to the market and looking to trade, right? Anyway, man, I hope that makes sense. I hope that was simple enough. Until next time, man, I hope you continue to free your mind.